Woohoo! Welcome back to Dorhen Studio. Get ready to level up your financial knowledge and future-proof your fortune. Today, we're diving deep into the unseen economic currents of 2026, the trends, forces, and opportunities that most people will completely miss. Don't forget to like, share, and subscribe because this knowledge could change your financial life. The world economy is evolving faster than ever. Inflation, interest rates, global trade, technological disruption, and the rise of digital currencies are all converging in ways that will affect your wealth. Most people only see the headlines, the stock market swings, the housing prices, or the latest crypto craze, but fail to understand the underlying currents that shape them. Understanding these currents is the difference between surviving and thriving in 2026. Let's start with inflation and interest rates. Inflation has been volatile over the past few years, and central banks are navigating uncharted territory. In 2026, real interest rates may behave differently than historical norms. Traditional bonds might no longer be safe havens, and cash sitting in the bank could slowly lose purchasing power. This means you need to think beyond conventional saving. You need to consider assets that grow with or faster than inflation, like real estate in strategic locations, dividend-paying stocks, or commodities that hedge against price increases. Next, let's discuss global trade and supply chain evolution. Post-pandemic supply chains, geopolitical tensions, and technological automation are reshaping global commerce. Companies that rely on outdated supply chains will struggle, while agile and tech-forward businesses will thrive. As an investor or entrepreneur, understanding which industries are positioned for growth is critical. Think about renewable energy, AI-driven logistics, and sectors aligned with global sustainability trends. Recognize the patterns before they dominate the headlines, because early positioning is where fortunes are made. Another critical force is digital currencies and financial technology. 2026 is likely to see central bank digital currencies becoming more mainstream, alongside decentralized finance platforms. This shift will transform payments, lending, and investment access. People who understand the infrastructure, security, and potential of these systems will have a significant advantage. It's not just about owning cryptocurrency, it's about understanding the rules, risks, and opportunities in this new financial ecosystem. Let's talk about demographics and consumer behavior. Millennials and Gen Z are becoming the dominant consumers and investors. Their values, sustainability, technology adoption, social responsibility, are changing the way companies operate. Investors who align with these trends can capture outsized returns. Similarly, older generations are retiring and reallocating their wealth, creating unique opportunities in real estate, health tech, and financial advisory services. Observing these demographic shifts can give you a roadmap for the sectors likely to outperform. Now, let's consider geopolitical risk. Economic currents are not just numbers, they're influenced by politics. Trade wars, sanctions, elections, and regulatory changes can shift markets in an instant. Future-proofing your fortune means building resilience, not just chasing returns. Diversification across geographies, asset types, and sectors is no longer optional, it's essential. And, critically, it's about thinking in scenarios. What happens if interest rates spike? What happens if a major supply chain collapses? Preparing for multiple outcomes is what separates successful investors from the rest. Technology is another game-changing current. AI, automation, biotech, and quantum computing are not tomorrow's news, they are reshaping industries today. By understanding which sectors benefit from technological adoption and which are disrupted, you can make informed investment and career decisions. For instance, companies integrating AI for productivity gains could see margins soar, while traditional competitors may falter. Being proactive instead of reactive is the key to staying ahead. Now, let's discuss personal finance strategies to future-proof your wealth. First, control your liabilities. Avoid excessive debt, especially variable rate debt that could spike with rising interest rates. Second, diversify your assets. A mix of equities, bonds, real estate, commodities, and digital assets reduces risk. Third, continuously invest in yourself, skills, knowledge, and networks will compound your returns just like capital. Fourth, maintain a long-term perspective. Short-term volatility is noise. The currency you understand today will shape your outcomes over years, not days. Another vital aspect is mental models for economic decision-making. Think probabilistically, consider opportunity cost, and invert problems. Ask yourself, what am I missing if I only follow conventional advice? And what would happen if this market fails entirely? By applying these frameworks, you make better decisions, avoid common pitfalls, and see opportunities where others see chaos. Real-life examples make this tangible. Consider investors who position themselves in renewable energy before the 2025 boom, or entrepreneurs who built digital platforms for decentralized finance in 2024. They didn't guess, they observed trends, understood fundamentals, and acted ahead of the crowd. Similarly, those who ignore digital transformation in traditional industries face steep losses. Learning from these examples helps you connect principles to actionable moves. Finally, think about your freedom number, the amount of money and assets you need to live on your own terms. Future-proofing your fortune isn't just about maximizing returns, it's about creating independence, resilience, and security. This requires disciplined saving, smart investing, and constant adaptation to the changing economic landscape. In summary, navigating 2026's unseen economic currents requires knowledge, adaptability, and proactive strategy. Understand inflation, interest rates, and supply chains. Embrace technology and demographics. Prepare for geopolitical shifts. Build diversified portfolios. Apply mental models. Learn from real-life examples. And never stop improving yourself. Those who do will not only survive but thrive in the coming years. Woohoo! Thank you for watching Dorhen Studio. Don't forget to like, share, and subscribe. Stay informed, stay adaptable, and keep growing your fortune. Welcome back to Dorhen Studio. Ready to elevate your financial savvy? Today, we're exploring the unseen economic currents of 2026. It's a ride through the trends and opportunities that many will overlook. The economy is shifting rapidly. Key factors like inflation, interest rates, global trade, and technology are all converging. Most folks only glance at the headlines. But understanding these currents can help you thrive instead of just survive. Let's dive into inflation and interest rates. Inflation has been unpredictable, and central banks are in uncharted waters. In 2026, real interest rates may act unexpectedly. Traditional bonds might not be the safest bet anymore. Cash could slowly lose its value in the bank. Thus, you must look beyond ordinary savings. Consider assets that grow with or beyond inflation. Think about strategic real estate, dividend-paying stocks, or commodities that protect against price hikes. Now, onto global trade and supply chains. The pandemic reshaped these systems, and technological advancements are transforming commerce. Companies stuck in outdated practices will falter. Meanwhile, agile businesses embracing new tech will flourish. As an investor or entrepreneur, identify industries primed for growth. Think renewable energy, AI-driven logistics, or sectors focused on sustainability. Spotting these shifts early positions you for success. Let's now discuss digital currencies. By 2026, central bank digital currencies will gain traction. Also, decentralized finance platforms will revolutionize payments and investments. Understanding these innovations is critical for maximizing your opportunities. It's more than merely owning crypto, it's grasping the rules and risks involved. Next, let's explore consumer behavior. Millennials and Gen Z are becoming the key consumers. Their priorities, sustainability and tech, are reshaping business operations. Investors tapping into these trends could see high returns. Additionally, as older generations retire, wealth is being reallocated, creating openings in real estate and health tech. Next, geopolitical risks are essential to consider. Political events can shake markets dramatically. Future-proofing means diversifying your investments across geographic lines, asset types, and sectors. Prepare for different scenarios. Ask yourself, what if interest rates suddenly rise? Or if a supply chain faces a major disruption? Technology plays a pivotal role as well. AI, automation, biotech, and quantum computing aren't just future possibilities, they're impacting industries right now. Recognizing which sectors will thrive with tech can guide your next investment moves. Next, let's focus on personal finance strategies. Start by managing your liabilities. Avoid excessive, variable rate debt. Diversify your assets to spread out the risk. Investing in your skills and knowledge will compound just like financial investments. Lastly, keep a long-term outlook. Today's choices create outcomes over years, not days. Incorporating mental models into your financial decisions is crucial. Think about opportunity costs and explore the unexpected. Ask yourself, what am I overlooking by sticking to conventional wisdom? Real-life examples can clarify these concepts. Investors who ventured into renewable energy before a 2025 boom succeeded because they studied trends and fundamentals. Observing these cases transforms principles into actionable steps. Don't forget to define your freedom number, the assets you need for independence and security. Building your fortune is about more than profits, it's cultivating resilience. To conclude, navigating the economic currents of 2026 requires knowledge and adaptability. Understand the forces shaping the economy and prepare a diversified portfolio. Utilize mental models and learn from actual examples. Continuous self-improvement is key. Those who adapt will not just survive, they'll thrive. Thank you for watching Dorhen Studio. Like, share, and subscribe for more insights. Stay informed, stay adaptable, and keep growing your fortune.